India and the United States, world's largest and oldest democracies, have long shared a relationship marked by both collaboration and competition. Over the decades, their partnership has evolved, shaped by shifting global dynamics, economic ambitions, and the aspirations of over 1 billion people. Today, these two giants stand at a critical turning point, facing choices that could redefine not just their own futures, but the direction of the global economy. Their economic partnership, once celebrated as a symbol of shared prosperity and mutual growth, now faces its toughest test yet. Years of growing trade have given way to rising tensions and uncertainty. Trade disputes and tariffs have replaced the language of cooperation. What was once a seamless flow of goods and services is now interrupted by new barriers and stricter regulations. The US demands greater access to India's vast and growing markets, pushing for reforms that would benefit American companies and investors. But India stands firm, determined to protect its farmers, small businesses, and the livelihoods of millions who depend on local industries. For India, opening up too quickly could threaten the very fabric of its economy. Policymakers on both sides are under immense pressure, from business leaders, workers, and voters, to defend national interests while avoiding a full-blown conflict. This is more than an economic disagreement. It's a clash of priorities and values, a test of how two powerful democracies can resolve differences in an increasingly interconnected world. With negotiations unfolding under the shadow of looming tariffs, the stakes are high for millions of workers, entrepreneurs, and families on both sides of the globe. India's Foreign Minister Jaishankar has made it clear there are red lines that cannot be crossed and national interests that must be protected at all costs. The world watches as these two economic powerhouses engage in a delicate balancing act. Will they find common ground and forge a new path forward, or are they headed for a damaging trade war that could ripple across continents? The outcome of this standoff will not only determine the future of India-US relations, but will shape the global economy for years to come, affecting lives and livelihoods far beyond their borders. In the escalating standoff between the United States and India, Washington has unveiled a powerful new weapon in its diplomatic arsenal. The question on everyone's mind: what tool is the US government wielding to assert its influence and try to bend India to its will? The answer is tariffs, steep, punishing tariffs, reaching as high as 50% on a wide range of Indian goods. These tariffs are not just numbers on paper, they represent a significant escalation in economic pressure, directly impacting billions of dollars in trade between the two countries. For many observers, these are some of the harshest tariffs the United States has ever imposed on a major trading partner. The move has sent shockwaves through business communities on both sides of the globe, with companies scrambling to assess the fallout and adapt to the new reality. Already, a 25% tariff is in effect, making Indian exports to the US significantly more expensive and less competitive in the American market. And the pressure is mounting, with another 25% tariff set to be implemented soon, threatening to double the cost burden on Indian exporters and further strain the economic ties between the two nations. Officially, the US justifies these measures by pointing to India's increased purchases of Russian oil. Washington argues that these deals undermine its efforts to isolate Russia economically, especially in the wake of ongoing geopolitical tensions and sanctions. However, many in India see this explanation as little more than a convenient excuse. They argue that the real motive is to force India to make long overdue concessions on trade issues that have been simmering for years, from market access to intellectual property rights. The Trump administration's approach is a dramatic departure from the quieter, more measured diplomacy of previous years. Instead of backroom negotiations and subtle persuasion, Washington is now taking its demands public, using the media spotlight to amplify its message and put India on notice. Rather than seeking compromise behind closed doors, the US is leveraging economic threats as a primary tool of statecraft, hoping that the sheer weight of American economic power will force India to reconsider its stance. This bold, America First strategy puts India in a difficult position, forcing its leaders to weigh the benefits of maintaining their own national interests against the risks of alienating a key global partner. The stakes are high, and the choices are anything but simple. Ultimately, this tariff standoff is about far more than just economics. It's a high-stakes political chess match, with both sides maneuvering for advantage in a rapidly changing world order. India's resistance is rooted in protecting its most vulnerable, millions of small farmers and producers. Opening up agriculture and dairy to US imports could devastate rural livelihoods. Most Indian farmers own just a few acres and can't compete with subsidized American agribusiness. The dairy sector, too, is built on small producers who would be wiped out by large US corporations. For India, these aren't just industries. They're lifelines for hundreds of millions. The government's protective policies are seen as shields, not barriers. Politically, defending farmers is non-negotiable. They're a powerful voting bloc. India's message, partnership is possible, but not at the cost of its most vulnerable. These red lines are clear. India will negotiate but not sacrifice its people. The US justifies tariffs by pointing to India's Russian oil purchases. Washington sees this as undermining efforts to isolate Russia, but India calls it a matter of national interest. With a huge population and growing economy, India needs affordable energy. India argues it's being unfairly singled out. Other major economies also buy Russian oil. The oil issue, once minor, is now a major sticking point, fueling mistrust. Indian officials suspect it's a bargaining chip, not a genuine concern. This has wedged geopolitics into trade talks, making compromise even harder. The dispute is now about more than economics. It's about sovereignty and trust. The stakes in the India-US trade relationship are truly enormous. Every year, the flow of goods and services between these two nations exceeds $190 billion. This isn't just a number. It represents a complex web of economic ties, business partnerships, and livelihoods that stretch across continents. From high-tech software to textiles, pharmaceuticals to agricultural products, the sheer diversity of trade is staggering, touching nearly every sector of both economies. Millions of jobs on both sides of the ocean depend on this relationship. In India, entire communities rely on exports to the US for their daily bread, while in America, countless companies depend on Indian suppliers to keep their businesses running smoothly. This trade not only fuels economic growth, but also supports families, builds careers, and creates opportunities for upward mobility. If the proposed 50% tariffs are fully implemented, the consequences could be severe. Economists warn that India's growth rate could drop by nearly a full percentage point, a setback that would ripple through the economy and slow progress on critical development goals. For a country where millions still struggle with poverty and where attracting foreign investment is vital, such a blow could be devastating. Small businesses, already operating on thin margins, would be hit especially hard, and investor confidence could take a major hit. The tariffs threaten to undermine India's ambitious Make in India initiative, which aims to turn the country into a global manufacturing powerhouse. If international investors start to see India as a risky bet, the flow of capital and technology could slow, stalling innovation and job creation. Meanwhile, in the United States, the impact will be felt in the wallets of everyday consumers. Prices for Indian-made goods, from clothing to electronics, are likely to rise, and American manufacturers who rely on Indian components could face higher costs, threatening their competitiveness and potentially leading to job losses. The recent cancellation of a US trade delegation's visit is more than just a diplomatic snub. It's a sign that tensions are escalating and that both sides are preparing for a prolonged standoff. As negotiators dig in and rhetoric hardens, the risk of a full-blown trade war grows. The economic pain is set to rise, with uncertainty clouding the outlook for businesses and investors alike. The longer this standoff drags on, the greater the risk to both economies. Supply chains could be disrupted, investments delayed, and growth prospects dimmed for years to come. Around the world, governments, businesses, and ordinary people are watching closely as the fallout from this dispute continues to grow, knowing that the outcome will shape the global economy for years ahead. Washington's frustration is rooted in what it sees as unfair barriers to the Indian market. US officials argue India's high tariffs block American goods, especially in agriculture, dairy, and medical devices. The Trump administration wants reciprocity open access for US companies, just as Indian firms enjoy in America. Tariffs are seen as leverage to force India to open up and reform. Intellectual property is another sore point. US tech and pharma firms want stronger protections. The Russian oil issue adds a geopolitical layer, raising doubts about India's reliability as a partner. For Washington, this is about fair trade, economic interests, and global strategy. The tough stance is meant to rebalance the relationship. The US wants change and is willing to play hardball to get it. India's stance is clear. National interest comes first. Policies labeled protectionist by the US are, for India, essential for development and stability. India insists on the right to make independent decisions, especially on energy and foreign policy. Jaishankar has made it clear India won't be dictated to by any country. The government argues that sudden market opening would devastate millions of small producers. India seeks gradual integration, not economic shock. The goal, a fair partnership that respects India's development needs. India is open to negotiation, but only on its own terms. The real impact of this dispute is felt far from government offices. For small Indian exporters, a 50% tariff could mean bankruptcy. In places like Tirupur, textile businesses face cancelled orders and layoffs. The ripple effect hits workers, suppliers, and entire communities. Farmers too are at risk, not just from imports, but from a slowing economy and shrinking subsidies. Fewer jobs and more uncertainty threaten rural and urban families alike. The government's red lines are about protecting these people, not abstract principles. For many, this isn't about free trade, it's about survival. The stakes are human, not just economic. With new tariffs looming and talks stalled, the future is uncertain. If both sides escalate, a tit-for-tat trade war could erupt, hurting millions. There's still hope for last-minute diplomacy and compromise. A deal might involve India making concessions on intellectual property or select tariffs, while the US eases demands on agriculture. The outcome will define the future of India-US relations. Partnership or power struggle. Both nations must look beyond short-term disputes to preserve a vital alliance. The world is watching to see if these democracies can find common ground. The livelihoods of millions depend on their choices.